All right, so let's begin. Just read the question and we'll go over it together, okay?
Okay. The Federal Truth in Lending Law, Regulation Z, gives the borrower a 3-day right of rescission when the loan is I'm going to say a loan secured by a second deed of trust on owner-occupied single-family residence when the money is borrowed subsequent.
Okay. This one?
Yes.
Good. Excellent.
An investor paid $300,000 for an apartment building, making a $75,000 cash down payment. 1 year later, the property increased 10% in value, which this resulted in $30,000 or 40% gain on that 75% equity. This is an example of okay, it's either going to be leverage or highest and best use. So I would say leverage.
Good. Excellent.
When must a copy of the loan broker statement be given to the borrower? It's either within 3, I think when signed.
Good.
A balloon loan can also be described as a due on sale loan, a non-assumable loan, fully amortized, partially amortized. Well, balloons loan, you pay a fixed amount and then you pay the lump sum at the end, whatever's left. So I would say due on sale or partially amortized. Maybe a partially amortized loan.
Good. You don't really see a due on sale loan. It's called a due on sale clause. So it's kind of a tricky one there.
Okay.
Okay?
Yeah.
So partially amortized means you pay it off before the loan fully amortizes. You know what I mean by amortize?
Is that when you have like a fixed amount every month?
Yeah, and it just goes down at an equal rate.
Yeah. The term warehousing with regard to mortgage means making low interest rate loans, making loan term loans, selling loans on the secondary market, accepting unsecured. Warehousing, I think, is like when they package them together.
Good.
So I would say selling loans on the secondary market.
Good.
Okay. Usury most nearly means lending money at fluctuating interest rates. It's illegal interest. I know that.
Good. Sounds like you've been studying quite a bit.
Yeah, I'm afraid I'm just memorizing the answers, though.
Yeah, you don't want to do that.
Yeah, that's what I'm afraid of because I've taken these tests so many times that I'm afraid I'm just memorizing the answers.
Have you used other test resources as well? Sometimes that helps.
I mean, I have, but for like the last maybe 2 weeks, I've been doing yours.
And that's why I emphasize using the vocabulary so much. You're not memorizing questions. If
Yeah.
you listen to my stuff, I go over a lot, like memorize vocabulary. And part is for that reason. Because when you memorize vocabulary, there's no answer. You see the word, and you just gotta know what it is.
Yeah.
There's not options to choose from.
Yeah.
So what's the answer on this one?
Oh, it's illegal interest. Sorry.
I think you said that. My bad. We got off on a tangent.
In an installment land contract, what type of title did the seller retain? I Okay. So I know it's either equitable or legal, but I think it's legal.
Good. Do you know what the difference is between equitable and legal?
Equitable means that I don't hold the actual title, but I hold possession of it, of the property.
Good. Well, just think, it means you get equity.
Yeah.
Okay, what does legal title mean?
Means I'm the I am the owner and I have the right to do what I wish with it.
Not really. So
No.
equitable title is more what you would normally know as the owner.
Okay.
The right to use and possess, gain equity. Legal title is the right to sell. So very
Okay.
often the bank has legal title.
Okay.
And in an installment land contract, the seller is acting as essentially the bank. They're the lender.
Okay.
Does that make sense?
Yeah, so equitable is to use and possess, and legal title is right to sell.
Good.
And that would be the bank, most likely.
Right. I mean, equitable title is also the right to gain equity, if you want to think of it like that.
Okay.
Because when you sell your house, before you do that, you have to get the legal title back.
Okay.
You know how you do that? You pay off the loan. And it all happens in one simultaneous thing. The buyer gives you money, and that's that whole escrow process. That's what's happening during that escrow process.
Okay.
Does that make sense?
Yes.
Okay, good.
Most lenders, when they are deciding whether or not to make a proposed real estate loan, try to minimize the borrower's difficulties which may arise in the future, such as a divorce or death, loan to value ratio, overall net yield, chance of a substandard loan becoming part of it. I would say loan to value ratio. Ooh, okay.
Okay. Do you understand this one?
I mean, I knew when I was reading it, they want to keep their risk as low as possible.
Right, and that's what substandard loans are. They're high risk loans.
Okay.
Okay.
But I didn't know that.
Yeah, so now you know. Substandard loans basically means people with crappy credit.
Okay. If each of the following loans would otherwise require compliance with the Federal Truth in Lending Act, which one would be exempt on the basis of the type of loan itself? The Federal Truth in Lending Act. Okay, a $25,000 loan for credit union for home improvements, an agricultural loan by a bank, $20,000 signature loan from consumer, a VA loan from a federally funded chartered savings and loan association. I know it's not the ones with the money in it. I'm going to say the agriculture loan.
Good. Excellent. Okay. So most of the rest of these have to do with like personal residence.
Okay.
That's why.
The FHA was primarily created to provide, the FHA is insurance for the lender.
Good.
So to ensure qualified buyers, to insurance for home loans made by approved lenders, insurance for all banks and lenders on home loans to qualified buyers. So it's either C or D, insurance for home loans made. I would say insurance for home loans made by approved lenders.
Excellent. Good.
Most lenders, when they are deciding whether or not to make a proposed real estate loan, try to minimize overall net yield, loan to value ratio. Didn't we just have this one? Chance of substandard loan becoming a part of their portfolio would be the answer.
Yeah, remember when you get it wrong, it goes back in the question for review.
Okay, gotcha.
Yeah, so when you see it again, it's because you got it wrong before.
Okay,
Because we don't want to leave it until you get it right, correct?
gotcha. The difference between the value of property and the total amount of liens against the property is collateral, actual cash value, equity, a down payment. So they're asking the difference between the value and the total amount of liens would be equity.
Good.
When a lender speaks of discounting, the lender is probably referring to the difference in the nominal interest rate and the effective interest rate on a specific loan, the process of determining the actual yield of a given loan by adjusting the variable interest rates, the process of determining effective interest rate, the proceeds dispersed by the lender are less than the face value of the note. So discounting is when a lender applies a fee to the buyer.
Yeah.
Okay. So I'm not sure on this one. I want to say I'm not sure on this one, actually.
Well, just take your best shot.
Okay. The difference between the nominal interest rate and the effective interest rate, the process of determining the actual yield of a given loan. I don't think it's C. And I would say A or D. So let's go with the last option.
Ta-da!
Okay.
Excellent. Good.
Which of the following clauses will put the priority of an existing mortgage or deed of trust below that of a mortgage recorded later? I'm going to say a subordination clause.
Excellent. Good. Do you understand what a subordination clause is?
That I do not.
Okay. So when you get a loan, what takes priority, the first or the second?
The first.
Good. Unless there's a subordination clause.
Okay.
Which means the first will take a subordinate position to the later loan.
Okay.
All right. Does that make sense? You see a lot with like refinancing and whatnot. It switches the priority of the loans.
So the first loan would take a backseat to the second loan?
Right, or become subordinate.
Okay.
If you want to use the word, it's in the clause.
Right. Okay. When processing a real estate loan application, a lender would correlate characteristics of borrower, loan, and property to make a credit rating, a loan commitment, a property appraisal, or a liability statement. I would say a loan commitment. Or no, a credit rating. I'm sorry. Oops, I was right.
Go with your first impulse.
Okay.
Mm-hmm. Always go with your first impulse, yeah?
Yeah.
Okay, good.
How is the capital gain calculated when an owner sells a principal's residence? Reducing the net sale price by property's adjusted cost basis, subtracting selling expenses from the sale price, subtracting the sale price from the original purchase price, subtracting the selling expenses from the original purchase price. How is capital gain calculated? Okay. Sale price. Okay. Subtracting the selling expenses. Subtracting the sale price. I'm going to say subtracting the sales price from the original purchase price. No. Okay.
Okay. Do you know what the cost basis is?
It's the original cost, correct?
Good. Yes, exactly. And we're going to see that question again, but it's important you know that.
Tax credits are a direct offset against tax due rather than deductions against an income. Credits are usually available for all of the following types of real estate except low income, restoration of historic new ventures that are running. I would say new ventures running at a loss.
Good. Excellent.
What is the difference between MIP and PMI? I think it's PMI insures conventional mortgages and MIP insures FHA loans.
You have been studying.
Or memorizing, I'm afraid.
Huh?
I said, or memorizing, I'm afraid.
Well, this is the kind of thing you do want to memorize. I mean, because that's kind of the word definition right there. That's not so much context.
Okay. Which statement best describes VA loans? Okay. A loan funded through the U.S. Department of Veterans Affairs for qualified veterans and approved properties. A variable adjusted rate mortgage. That's not going to be it. A loan insured by the Department of Housing, which offers low income. That's not it. A loan backed by the U.S. Department of Veterans Affairs, which offers veterans and service personnel the opportunity to buy a home with favorable terms, often with no down payment requirement. Well, I know VA loans, they don't have a down payment requirement. So A and D both sound good. Yeah. I would say the last one. How is capital gain calculated when an owner sells a principal residence? Subtracting the selling expenses from the original purchase price, subtracting the sale price, subtracting selling expenses, reducing the net sale price by the property adjusted cost basis. That would be reducing the net sales price by property adjusted cost basis. Woman owns one of 20 townhouses in a new development in a fee simple, along with a 5% ownership share in the parking facilities, recreation center, and grounds. What type of property does she own? Well, I know it's condominium. So, but last time I did this question, I chose cooperative. But is there like the only difference? Like a cooperative would have interest, correct? I mean,
Well, here, let me phrase it to you like this. This is the
okay.
simplest way I can explain a condo versus a co-op.
Mm-hmm.
In a condo, you own one of the 10 units. In a co-op, you own 1/10 of all 10 units.
Okay.
Does that make sense?
Yeah. So what differentiates this one is a woman owns one of 20 houses.
Yes,
And this
exactly.
one ticks me off so bad because I live in a condo, so I should know this.
Yeah,
But
because her ownership shares in parking, like the common area.
okay.
She doesn't own a percentage of the other people's apartment.
Okay, so a co-op you own a share
Yeah,
of.
that's why co-ops are smaller, and also that's why to buy into a co-op, you have to be approved. They're usually like 5 to 10 units. They're not these massive, complexes.
Okay.
And people like co-ops because it's much more of a team group effect. Like everybody takes care of the whole property
Mm-hmm.
because everybody has an interest.
Okay.
All right.
Which action is legally permitted? Telling a family with 6 children that apartment has been rented when it in fact has not. Advertising property for sale only to a special group. Altering the terms of a loan for a member of a minority group. Refusing to make a mortgage loan to a minority individual because of poor credit. It would be the last one.
Good. A lot of people get fooled on that one because they throw in the word minority, and
Yeah.
obviously you clicks into violating fair housing and whatnot. But
Uh-huh.
when you read them on, it says poor credit.
Yeah.
So that was good that you found that. They do those tricky things from time to time.
I know. In an FHA insured loan transaction, the mortgage insurance premiums may be made by the seller or the buyer. Discount points may be paid by the seller or the buyer. Interest rate is set by the FHA. Mortgage insurance premiums must be paid to the seller. Okay, well, I know interest rates are not set by the FHA. A mortgage paid by the seller. I would say the first one. No. Okay. Okay. Okay, which of the following statements is most accurate concerning mortgage bankers? They never lend their own money. They negotiate loans which are readily saleable in the secondary market. They are regulated solely by federal law. They never make government-backed loans. Which of the following statements is most accurate? Okay. I would say they negotiate loans which are readily saleable in the secondary market.
Good. Oh, you okay?
I live very close to like the fire, all that stuff. So
Oh, well, that could
and I
get.
have my windows open because it's like 68 degrees and beautiful. So, okay.
All right.
When financing a home with a long-term loan, if equal monthly payments are made, the amount of each payment applied to the outstanding principal balance will decrease at a constant rate, decrease while the interest payment increases, increases while the interest payment decreases, or increases by a constant amount through the life of the loan. Okay, when financing a home loan with a long-term loan, if equal monthly payments are made, the amount of each payment applied to the outstanding loan balance. Outstanding principal balance. Okay, well, if loan payments are made every month, that should decrease the balance.
Okay.
So I guess it should decrease. I don't know why the interest rate would increase. So I would say decrease at a constant rate, but I don't think it's right. No.
Yeah. So increase while the interest payments decrease.
Okay, what's increasing? Oh, no. The amount of payment applied and interest decreases. So payment applied to interest decreases, and the amount of each payment applied to the principal increases.
Yeah, just think of that amortization table. As you make payments, what happens in that graph?
Okay.
Okay.
A purchaser cannot qualify for a conventional financing and negotiates a contract for deed with the seller. The buyer in the agreement must lease the property from the seller for the duration of the contract term, has the possession and pays property expenses and taxes, has a full legal interest in the property, or receives a deed from the property at closing. This agreement cannot qualify for this. And negotiates for deed with the buyer in the arrangement. Okay, must leave the property. Lease the property. I'm going to say he has possession and pays property expenses and taxes. Which of the following best expresses the concept of equity? Current market value minus property debt. It's not that one. Current market value minus capital gain. Replacement cost minus depreciation. Okay, so equity is the money you have in your house after debt. I would say current market value minus property debt. So I would say the first one.
Excellent. Basically, when we talk about equity, I always phrase it as after you buy your house, what can you use to go buy a cookie with? And what I mean by that, it's like it ends up being the physical amount of money.
Okay.
It's the value minus all debts.
Okay.
Okay?
Mm-hmm.
Going back to that equitable title, what did that mean?
Equitable title, the use and possess.
And it means you get the benefit of the
Property.
equity.
Oh, equity, yeah.
Right.
Which action is legally permitted? A new loan, estimate of settlement costs, a special information booklet, a new loan closing disclosure 3 days before application, the lender's most recent report of financial stability. Which action is legally a new loan estimate? I would say the new loan closing disclosure 3 days before application. Okay.
Yeah, as you can't change all disclosures.
I don't even understand really, like, what action is legally permitted on, like,
Well,
on
what are you allowed to do?
Right, but I'm allowed a new loan estimate of settlement costs.
Right, that's just telling people what they're going to pay. It's not changing what they're going to pay. It's just, telling them what's going to be owed.
Okay. Okay, when Jones purchased Brown's property on an installment sale, he assumed an existing loan which exceeded Brown's basis in the property. The amount of the assumed loan over Brown's basis will be added to Brown's basis, treated as part of his down payment, whether cash was received or not, deducted from Brown's basis, or treated as part of the sale price. I'm going to say the down payment.
Good. Excellent.
Okay, in an FHA insured loan transaction, the interest rate is set by the FHA. Mortgage insurance premiums must be paid by the seller. Discount points may be paid by the seller or buyer. Mortgage insurance premiums may be paid by the seller or the buyer. We already had this one and I can't remember what it was.
Maybe that's a good thing.
Yeah, I know. Okay, in an FHA insured loan transaction. I know it's not the first one. Mortgage insurance premiums must be paid by the seller. I mean, that doesn't really make sense to me. Discount points may be paid by the seller or the buyer. Mortgage insurance premiums may be paid by the seller or the buyer. I thought discount points were to be paid by the buyer.
Okay, so what do you think?
So maybe the last one? Ah, shit.
Remember it says or, so you said you thought it was paid by the buyer, right?
Yeah.
But can you negotiate that?
Well, apparently.
Well, yeah, I mean, think about it. If you're selling a house and I just tell them, like, I'll buy your house if you pay these points, and if I'm giving you some phenomenal price,
Right.
you may say, yeah, sure, why not? Because I still am making a lot of money here.
Yeah.
Does that make sense?
Yeah. I just have to read a little more into it, I guess.
Yeah.
Okay. A homeowner has owned her house for over 50 years. It has fallen into disrepair, but because she lives on a fixed income, she does not have the money to make the needed repairs. She has a considerable amount of equity in the house. Which type of loan would best provide her the funds to make the necessary repairs? That's when she's going to take her equity and put it back into her house for the repairs, and they're going to allow her to do that. So I guess that would be a reverse mortgage.
Good.
Which of the following best expresses the concept of equity? Okay. It's current market value minus property debt.
Excellent.
The borrower with the construction loan received the loan amount in stages called draws during the construction period. That is the answer.
You're sounding pretty ready.
Which action is legally permitted? A new loan estimate of settlement costs. In an FHA loan transaction, the discount points may be paid by the seller or the buyer. This type of real estate loan that allows the lender to increase the outstanding balance of a loan up to the original sum in the note while advancing additional funds is, I believe, an open-end mortgage. The provision in a mortgage or deed of trust that gives the lender the right to call the entire balance due upon default is acceleration clause. When financing a home with a long-term loan, if equal monthly payments are made, the amount of each payment applied to the outstanding principal balance will increase by a constant amount. Increase while the interest payments decrease.
Good. So you did pretty well. The only thing that concerns me is when you kept referring that you were memorizing the questions. Because that's never my goal. Because I don't make any claims having the exact questions on your exam.
Yeah.
I know some places do that. I just feel like that's disingenuous to do that. And because it sounds like you know what you're talking about, know your material. But I would really try and maybe, I hate saying this, maybe look at some different questions or look at the vocabulary like you said.
Okay.
You know what I mean? Because you've definitely been studying. You know what you're doing. It's just memorizing questions. You know, you don't want to do it. I don't think you just memorize them. You know what you're talking about. Because even if you memorize them, it's hard to memorize stuff if you don't know what you're talking about.
Okay.
If that makes sense.
Yeah, so should we go over vocab, you think?
Like, you know what I mean? We don't have to. I'm just saying, we don't have that much time to go over a lot of vocab. I'm just saying, as you move forward today, that's, you want to look at stuff. But you said you memorized, but I don't think you did all this just by memorizing questions. You knew what you were talking about. It's a lot of these concepts. I mean, you've put the work in.
Okay.
So you should be, I'm just saying that. It's like if there's anything that would give me apprehension.
Yeah.
But please don't misunderstand me. You're prepared and you're ready to go.
So you think the best thing to do today might be to stop taking the tests and just work on vocab worksheets and things like that?
Yeah, or maybe even just relax. Honestly. I mean, your test is tomorrow.
I'm even during this, I just get so tired. Everything starts running together.
Well, that's my point. At some point, it's not helping.
Yeah.
And if you're just clicking buttons on practice questions, that's not really helping anymore.
Okay.
And that's why with people who need to power through, I'd say basically rewrite the vocab worksheet and go through glossary in your textbook. Because most textbooks you use, they'll have a relevant vocabulary section in each section, and just try and fill it out, physically trying to write. So you don't zone out. But even then, at some point, if you're just blanking, you got to realize when that moment is.
Yeah.
Which is why I tell people not to do this one day before studying.
Yeah.
Because it's just a lot to cram in. They zone out unless you have OCD. It's hard to stay focused.
Right.
And that's why people do it bit by bit. Not only will they pass, but they'll also learn stuff that's relevant to what they're going to do.
Yeah.
And it doesn't sound like you waited for the last minute.
No.
So you should be okay.
Okay. All right.
Okay?
Yep.
All right. Well, go get him. I think you'll be good.
All right. Well, thank you.
You're welcome. I'll talk to you soon.
Bye.
Bye.